types of ways. So first things first, what we're not going to do is chart anything that we don't need. All right. We are going to just get rid of any sort of data that is just going to be irrelevant. And since we're doing this all algorithmically, we're going to focus on building alerts for this data and doing this all algorithmically. Okay. So I have a few different spreads. We're going to look at them all and we're going to choose one. Okay. And then we're going to boil it down to three. And then we're going to break that spread up. We're going to have the spread up here. And then we're going to have the what makes up that spread down here. So actually, I think I need six. I think I need six total windows, which is okay because first things first, we're going to look at all the spreads individually. And we have 1, 2, 3, 4, 5, 6, 7, 8. So let's see if we can get 8 to start with. And we're going to look at all 8. So first, it's going to be Aussie flat CAD Swiss, which is a widening spread. So we're going to do all the widening spreads on the top, which is 1, 2, 3. And then we got 1, 2, 3, 4, 5 on the bottom. So that's more than, there's got to be another one. Let's see. 2, 4, 2, 4. There's 8 total. I can't see them all. All right, well, let's just go ahead and plug them all in and then we'll make them out later as to what they are. So first is Aussie flat, which is CAD Swiss, so Aussie dollar CAD, and then Aussie dollar Swiss, so AUD, CAD, AUD. Now I usually like to use, wow, I usually like to use a Wanda, so I'm gonna go back. I like FXCM because they do have um, good data, but so does a Wanda. Some FX brokers won't give you tick data. They won't give you like flow information. The next pair is CAD flat Aussie dollar NZD. So Aussie dollar CAD again and Aussie dollar NZD. What we got to do is make sure that we don't ever get like a negative price. If we get a negative price, then it's flipped the wrong way. We're gonna do Aussie dollar NZD minus Aussie dollar CAD. Okay. So the thing is really a spread is just you're taking the more expensive asset and you're putting that at the bottom of the spread, and you're putting the more expensive asset at the top. And that's what makes it a spread. Next on the third, we're CAD flat Aussie dollar. So AUD CAD. I see AUD USD. I think might be a little bit more expensive. We'll see. AUD CAD. We'll see here in a second. Turns out that it's AUD CAD. It makes sense. AUD USD, obviously the dollar's driving the price down, so CAD is going to be more expensive. All right, we got CAD JPY, so I think it's Euro JPY. It's the CAD JPY will probably be more expensive relationship. And can't forget, select a broker. Okay. Okay, so far so good. Okay, now we're gonna do Euro flat CAD. So Euro CAD minus Euro JPY. These flows, I just collected them literally like a few minutes ago. So that's wrong. Euro JPY, wind up minus Euro CAD. Yeah, yeah. Okay, cool. Kill this video real quick. Don't need it. All right, let's work on the next part. GBP, CHF, or GBP, USD, USD, GBP, CHF. Actually, I think this is going to be the wrong way. Oh, turns out that it's right. All right. Strong Swiss, huh? NZD, USD, NZD CAD. This one, I'll flip this one for sure. NZD CAD minus NZD, yeah, USD. All right. And we're gonna go Wanda, and we're gonna go Wanda. Then yen flat Aussie dollar. So Aussie dollar Japan yen. I think We already do this one? No, something close to it. Now, why am I showing you guys how I do this? I don't know, because I do believe that right now it's a tough time to make money. You know, markets are trading sideways, they're upside down. It's really unpredictable. I don't really know how many of you are out there making money. I don't really see opportunities as well. But where I am making money is in the spreads, you know. So when I'm buying and I'm selling, I'm kind of like hedged out a lot of the directional risk on any given asset. But spreads tend to kind of just work more like it's more like it's more like if somebody, you know, puts like if somebody gets in their car and they start driving somewhere, are they going to use gas? And the question is, the answer is yes. And when the spread is going down, like for example, GBP USD, GBP Swiss at the bottom, the second chart on the left, at the bottom is spreading down. And you can see like all of these charts are quite consistently like they're moving in a consistent direction, similar to the way an FX would move. But what you're looking at is the relationship between two assets that are highly traded together. When someone's doing business, say for example, in the pound, GBP USD, GBP Swiss, these are the assets that are trading. So um, it could be, you know, like it could be like a relationship between an institution and a corporation. Maybe the corporation is based in Switzerland or it's based in London. And so they're trading with an institution that's based in New York that uses dollars, and they're moving money into the Swiss, perhaps. And so this is creating this correlation in this relationship. And anyways, it could just be that they're highly correlated assets and that they're often used to trade together. Maybe one has more volatility than the other. And that's the thing that we're going to trade today. Because usually I'm finding in this relationship that one has more volatility and one's a little bit more stable. So it's like a stable coin and a more volatile coin. And when you put these two together, you create this spread relationship that contracts when you're using both of them together. And when you're using them less, or when there's less flows going into that, then those spreads tend to widen a little bit, where retail price tends to rise because there's, say, like a lack of supply. Retail prices usually goes higher. Wholesale prices usually come down because, you know, there's not that much demand for the asset, but there's more competition once it gets out to retail for what's left over. And so that creates a higher price. But when everyone's buying from wholesale to sell at a retail price, then prices tend to come together because wholesale buyers are or wholesale sellers are under pressure, and so they have to raise their price because they're getting all this demand. They're like, "Oh, whoa, what's going on? Why is everybody coming over here?" You know, they're doing deals, and I got to raise the price because I'm running out of supplies. I got to order more, and you know? And then retail is like, oh, there's a lot of people selling the same thing. We need to lower prices, bring the prices down, bring the prices down. So everyone's kind of like clamoring, right, to get the prices down. So that's what you're looking at when you're looking at spreads. You're not looking at directional markets. You're looking at the relationships between directional markets. Now, which one do we like the most? Now, here's my key judge on all of this is going to be fair value. All right. So there's really good fair value. Uh, um, let's see. I got my scripts, but I can't load because TradingView told me if you don't make them available to everyone, you can't make a video or an idea with them in there because then they're going to try to use it. And they're like, don't do it again. Literally. Swear to God. All right. So here we go. This is a really good fair value gap indicator to use. So we're just going to take this and we're going to drop it on all of these. And what we're looking for, right now, fair value. I mean, it's not. Don't guess what. some level in the market is. Like that's just don't do it. Like even with, expirations on options, you never know where they're going to push the market. So it's like there's nothing out there that's going to give you a clue, or I shouldn't say it. It'll give you a clue, but there's nothing out there that's going to tell you where the market's going to go before it goes there. It's just not how things work. Really, the strongest forward-looking indicator that you can use is going to be liquidity, and then how the liquidity is stacked. That's really important right there. It's like, is it stacked where it's stronger on the sell side, or is it stronger on the buy side? If where they're buying liquidity is more competition for that, then there's going to be a lot of flow there. I mean, there's going to be a lot of money there to absorb anything that comes against it. So that's going to end up eating the market higher, right? Because they're always buying at the bottom of the market. They're always buying for cheap, right? Below the mid price. And then when you go to exchange market, if you sell, you're selling to them and they're down there at a cheaper price, they're going to absorb that. There's a lot of liquidity there. It's going to absorb all the orders and it's just going to eat through the market higher. If there's a lot of liquidity at the top of the book, that means that these large liquidity providers want to sell to you. So they have a bunch of liquidity they want to get rid of, and it's going to eat through all the orders on the downside. If it's balanced, then it's going to stay in the same place. And that's what determines where price goes, is because price is matching that midpoint between the nearest level of liquidity that it can match it to. So if there's one above the midpoint and somebody comes in and they do 10, they're going to take out that one above the midpoint plus the nine above that. And if there's only one at every, level above there, every price above that, then it's going to take out 10 different prices and it's going to drive price higher. So it's a matching engine that's moving price around based on the demand for the asset at the market price. Okay, so why are we looking at fair value? We're looking at fair value because we just need to know where the frick the fair price is based on the time frame we're looking at. So then obviously the most important time frame on an intraday chart is going to be the daily, because you're just like, give it to me, baby. One day, man, where are we on the daily? Where's this thing overall? And that's not what we want to do, right? We do not want to see this. This means that somewhere along the way I made a mistake and every chart is the same. Okay. I think we're back to safety. What we need to do now is just interval. Okay. Move everything to the daily. Okay. So now the other indicator I want to use, I can't use, but it would literally tell me who's in control. But we're just going to go off of the flow data that I have. And let's see. Let me open up the report. Pause. Okay, now, just for your sake, I'm going to highlight all the bull markets. CAC flat, LCNZD, CAC, CAC flat. Just get that one in. It's dollar CAD, Aussie dollar USD. This is bullish. NZD CAD, NZD USD, bullish. Okay, yen flat. Now, the rest of these are bearish. So I did it that way. Bring me back. Okay, so again, getting rid of my video. This is going to make it even simpler for us to just kind of see. Now, if the market is bearish and fair value is below the market, then we are in inexpensive territory. If the market is bearish and the value is above the market or above fair value, or I'm sorry, let me get this again. If we're bearish and we're above fair value, this is inexpensive. If we're below and bearish, that's expensive, right? Because the fair price for something is how we determine whether or not it's expensive or not. And so if you're not checking fair value before you trade something, you're kind of like going in there just like hoping to like you're gambling because you're not even looking at something for the value. You don't know the value of it. You don't care about the value of it. You're just focusing on the direction. And that direction will use your liquidity to turn around on it. And then you'll jump out and then it'll use your liquidity again to continue higher and you'll wonder why you can't make any money. It's because you're not taking the proper precaution ahead of time, which feels like you shouldn't have to do it. Like when you start trading, obviously you feel like you don't need to do this. Um, but that's only because no one's ever told you that you actually need to do that. That's all. It's just you weren't taught. But if you were taught to trade, you were taught buy low, sell high, but not just the chart that you see. Buy inexpensive, sell expensive. And so right now, if we're bullish and we're above, this is expensive. So we're not going to trade this. So we're writing this one off. We're not trading that. Okay. No, we're not doing it. We're bear, we're keeping that. We're bull, we're keeping this because we're below fair value on the daily, meaning we can trade into fair value here very easily. We could also pull back, but it'd just be more viable because fair value, the fair price for this asset is higher. For bear, we're keeping this. For bear, we're keeping this. For bear, we're keeping this. For bull, we're keeping that. So we have many options. For bear, we're keeping this. So we have many, 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 many options. Now the question is which one do we want to trade? Now, my data actually has numerical data, and it says that yen flat Aussie dollar Swiss, which is going to be this one right here. Uh, let's say Aussie dollar Swiss yen flat. So it should be JPY Aussie dollar JPY yen. Let's see Aussie flat cat Swiss. There's no Aussie dollar. I think I put this one in incorrectly. So it would let me go back and let me check this other chart to make sure that I have it right. Yen flat, Aussie dollar Swiss. This is the last one. This is the last one. All right. So really it should be AUD, JPY minus AUD Swiss. Let's try that. Okay. Proper stuff. And this one is actually the most traded spread out of all of them. And look at that. I mean, look at that turnaround at fair value. So with that being said, this is the one I'm going to commit to here. So we're going to go Aussie dollar Swiss. I'm going to open up one of my watch lists that I have. It's called What's Flowing, all right, where I do specific pairs like this. Right now, tomorrow there will be another group flowing. It changes every day. It's not really a continuous thing. It really is based on FX flows, like market maker flows. I'm gonna put this in here. I'm gonna add a section. I'm gonna title this section with UDJPY, just in case I decide to drop some individual tickers in here. I can. Um, So that's why I created a group for all this stuff. I might even drop some institutional like economic data here, like a chart there, and then save it in the watch list so I can like review it later. Say if it's like these things correlate with each other, like flows in this asset correlate every time something like this happens. Now I'm gonna go back. We're gonna go to start with a four square chart, and we're gonna just group all of the symbols, and we're gonna select this, and we're going to free this from the dark background here. Okay, go white. All right, now that we're here, we're gonna take the symbol off. Okay, so now that we're here, we can now break this pair down. So we have the spread relationship up here. We're gonna keep that there. Over here, we're gonna just do Aussie dollar JPY. And over here, we're gonna do Aussie dollar Swiss. Okay, so now, do we actually need this one? Hmm, I don't think so. There was a reason I thought I thought that we would need more. Can't really think of that right now. Kind of makes me want to keep it. So I'm going to keep it for now. Now, what are we going to focus on? We're going to focus on this. And then here's what I'm talking about. This is exactly what I'm talking about, right? There's always like a more volatile pair and there's always a more dormant pair. And that's what I've been trying to break down. So next video, I'm going to go ahead and we're going to market make in here. What we're going to do pretty much is we're going to collect commissions from serving the market on both sides of the market. So as you can see, it trades in a really tight range, you know. So that's the reason why I think that this is blessing here. It's the blessing is that we got a market that is in a range we can make a market in. We don't have to really trade it directionally. We don't have to expect much from it directionally. But then over here, we have a directional based market in which we can find a range. We can, kind of figure out some levels in it. And, you know, we can break down the trend, my friend. Oh, yeah, we're about to get into the money. Love you guys. Talk to you soon. Peace.